Peace.
Peace.
This is Joshua Law, Mr. PhD. You're just now entering the cipher. Peace.
Peace.
This is Joshua Law, Mr. PhD. You're just now entering the cipher called Real to Real 360. K-Wise.
Peace, God.
Bring that beat in, kid.
Indeed.
Peace.
Yeah. What's going on, party people? Welcome to the Real 360 show. Let's get it in.
We do the knowledge of wisdom so you can understand. Real 360 shows in full command. We changing the game for how it all was taught. From bondage to freedom to an independent thought. Yo, the show is here to bring about a change for real. To lighten everyone so we all know the deal. 360 degrees is a fact. We created the show to give our love back to our communities so we can know what's going on and give them the support from knowledge to born. So if you're ready to learn, then it's time to go. Sit back and relax and enjoy the show. Peace.
Peace, 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 peace to all our followers, listeners. Peace to the nation of God's and earth, the lost 5%. Those who went out and celebrated the life of Infinite Al-Jamar yesterday. Peace to all my brothers and sisters universally. Today is going to be part 3 with my righteous brother, Absolute Truth. We're going to break down some financial literacy, different stock options, and how they work out with the average Joe trying to get into the market. At this moment in time, I want to bring on my righteous brother, you know what I'm saying, Absolute Truth. And I want everybody to clap their hands and get ready get your notebook because he's deep with it. Peace to the God. Peace to the God.
Peace, Almighty. Peace, God.
Peace, God.
I appreciate you having me back.
Man, we had to, man, because you got so much information that we can't just leave it on the table. You know, financial literacy, mental health, these are some of the things that need to be addressed in the Black community. You know what I'm saying? These are some of the things that definitely need to be addressed in the Black community. We have yet to really touch on certain aspects of certain things like we should. So we're looking at trying to make things manifest on different levels. So if we can get financially secure in the Black community and learn different options, then it should be great to have, you know what I'm saying, these things happen. So at this moment in time, can you just add on with me, Lord?
Yeah, God, everything you said is right and exact. And you really echoed the whole sentiment of why I got involved in this in the first place. So I wanted to really start it off because in the last episode we had, you asked a question. And due to the, we had some technical difficulty, I misunderstood your question.
Right.
So in reviewing that, it seemed that you were really asking about self-directed 401ks versus a managed account. And I never really got to speak to that. So I wanted to start off with that. So a managed account, if you have a 9-to-5 gig, you get in a 401k and you select one of their managed funds. Okay, whether that's a target date fund or just any one of the funds that they manage that you select. Basically what you're doing is you're giving them the authority to make decisions for you financially. When to buy and sell a particular stock, what happens with the dividends, when to liquidate, when to rebalance the portfolio and all of that. You're giving them that option. And that's okay for someone who may not have a lot of time to, or maybe totally, it's a whole foreign concept to them. if they don't really understand how it works, they may not have the time to dedicate to learn, then it's fine to have somebody manage your funds for you. You just need to be aware of the fact that, you're entrusting your financial future to someone else. We've had situations in the past. One of them, Lehman Brothers, is an example of one of these financial institutions blowing up. Mm-hmm. So you turning over your financial freedom to them and letting them decide, then you're at the mercy of their performance. Okay. Also, with that being said, it's okay to let them do it with the idea of eventually taking over it yourself. Just make sure that you're monitoring the performance. You're educating yourself so that when you do get to the point of self-manage, now when
you all right, Lord? Right now, I guess we're going through a little technical difficulties with our righteous brother. And it seems like it's always happened as soon as we get an opportunity to really indulge in what's going on with the financial literacy. And
can you repeat that?
No, we were sitting there and driving to add on, and you had just blanked out for a hot second.
Oh, okay. Yeah, so I was just describing the difference between a managed fund and self-directed. Self-directed, whether you're going to take the funds that you're contributing, the funds that your company is matching with your funds, and you're going to decide where it goes. You're going to decide when you sell, when you buy, what happens with your dividends, when you're going to rebalance your portfolio. All of those decisions will be up to you, which in order to be successful, you're going to need to do research first to know what to pick. So if someone is new to it and they want to get started with it, it's okay to have somebody manage your fund. Just be mindful that they can make mistakes. You understand? So you want to be on top of it and get involved and educate yourself as much as possible so that eventually, if you desire, you can take over it and do it on your own. A story that I have is I had a situation like that, and I was working at a prominent company, and I was, doing the 401k, getting the match and all of that. And when I left that job, I actually took my 401k and I just directed it, all of my funds, into what I thought was the best performing ETFs. Mm-hmm. And after about the first month, and I saw the performance that first month, I was really surprised. Like, wow, I'm doing really well. You know what I mean? But that was because I had done the homework to select which ETF to use. And I was using Vanguard funds at that time. They're the most cost-effective ones. And I was using those at that time. And after 1 month looking at it, I was like, wow, I had, I believe, total market exposure. I had the S&P that's tracked by Vanguard, and I had a bond fund. Okay. So usually with a 401k, that's what you're going to have. You're going to have some aggressive, some stocks. You're going to have some bonds. And I just selected those, and I just went in. It was maybe 3 or 4 instruments that I had. And when I looked at the first month's performance, I was really surprised at how it performed. So it's not impossible for somebody to do it. It's just legwork that's involved. However, you can go either way, whatever works best for you.
Now, can you break down the reasons why individuals are better with bonds than regular stocks?
Well, actually, the reason why you want to have a diversified portfolio, right? Mm-hmm. You can put all your money in stocks, right? Let's say you were to do that. If the market crashes, you have nothing to offset that. There's usually something that you want to offset that. So you'll have, depending on let's say, age, right? A young person that's 20, 25 can probably have 50 or 60% of their funds in stocks. Because even if there is a crash, they have enough time left in their career to make up for the loss. Or the stock market has a, I would say it's kind of, I don't want to use the wrong language. It is historically been known to go up. Okay, so it's eventually going to, no matter what happens or what kind of, if we get a recession, if we go into a bear market or whatever, stocks will eventually recover. So if you're, 25 years old, you want to put most of your money there because that's where you're going to get the majority of the gains. Now you get bonds to offset that. Typically or historically, what happens is when stocks are not performing well, then bonds are performing well. Okay. It's different this time because we have the Fed raising the interest rates. And that is when bond rates go up, the yield goes down. So it's a lot of funky nuances with that at this particular moment. But some other hedges that they have, so you'll have stocks, which stocks are just represents businesses and corporations that you're investing in. Then you have bonds, which is more of a stable investment. You get a fixed rate. So you're not going to get, 200% return on a bond. You're not. You may get a steady 3% for 10 years or 20 years. Then you have precious metals. Okay, you can invest in that. A lot of people look at, in the past, gold was a hedge for those type of things. You know what I mean? And what some people are making the argument of now is that cryptocurrency is going to now be that hedge. That has yet to be shown and proven, especially over the last 6 months. But since the market has been going down, and that means crypto should have been going up, which that's not the case. Crypto is going down as well. So that's basically when you want to set up a portfolio for yourself, you want to have something that is diversified. The same thing as if you're looking at stocks, you don't want to put all your money in tech stocks because if tech gets hit, then your whole portfolio won't get hit. So you can have some in tech, you can have some in what's called consumer staples. That's some of the stocks that we were building about, like Kellogg's, General Mills, Procter & Gamble. They make, consumer staples, Pampers, canned food, toilet tissue, toothpaste, stuff that people need regardless if the economy is booming or not.
Right.
Make sense, God?
Sure indeed.
Next thing I wanted to get into was sharing some stock charts to go over some of the things that we discussed before, because sometimes you need a visual aid to complement what the audio is bringing. Okay, God? So I'm going to go into that. The first chart I want to share is going to be a 6-month chart of the S&P. Okay? This 6-month chart is going to show the high. The high was made on the 4th of January, and that was $479.98. And the low was made just last week, Thursday, on the 12th, May 12th, at 385.15. So this is going to represent what has been going on in the market over the last 6 months. Let me bring that up. Now, God, just tell me if everything comes through clear. This is my first time doing this. Okay. Hold on.
Now we're going to school now. The God done brung out his slides. So y'all better get your pens and papers out here and see how this is going to break down.
Okay.
Are you able to hear it, Lord?
Yeah, keep building up. Can you hear me?
Yeah, Lord, I can hear you.
Okay, let's go.
All right.
Okay, can you see that?
All right, here we go. Right here. Let me see something.
You can see it?
Right there. I just brought it up.
All right, I'm gonna enlarge it. Okay, so this is a 6-month chart of the S&P. You see that yellow triangle over there? This is the high which was made on the 4th of January, 479. Mm-hmm. So basically, you can see that the market is going from the upper left.
What you shared is like your folders was coming through, not necessarily like the different folders. It just didn't open up for that.
So you don't see a picture now that says SPY?
No cipher that. No cipher.
Okay, hold on. Okay, let's do something else. Then. Okay, God, I'm gonna go directly to my software that chart was from. Let's try it that way. Okay, what do you see now, God?
Okay, let me see. Right now is we added to screen. I think it's basically blank at this moment. Let me see. And peace, God, peace, Lord, to the God Dupont. Peace, God. It's an enter a stock symbol.
Okay, perfect. So I'm pulling up right now the SPY. You see that now?
Right, I see that now.
SPY. Okay, let me enlarge this. Okay. Now I'm going to go to 6 months. Mm-hmm. Okay, so can you see my mouse up?
Yeah, Lord.
Okay, so that's the high that was made on the S&P on the 4th of January, 2022. And that was 479.98. That was the high. So we just made the low on the 12th of May at 385.15. So if you had money in the market during this time, you lost value. Okay. And I just wanted to show the example of how the market has been going. Now, if you look at all of these different candles, you'll see red ones and green ones. So if the red ones, that means however the market opened, we closed down from what price it opened. And if you see a green candle, that's going to be we closed higher than we opened. Mm-hmm. So even though we are in a downtrend and the market has been going down, you can see that there's been times that it has gone up in between that. Now, these candles that you're seeing here, these are all daily candles. So each candle represents one day. Mm-hmm. Okay? Mm-hmm. So now what I wanted to show, right, is even though we're in this downtrend, the market has been going down. So all of those people out there who have 401ks and retirement accounts and stuff like that, if they had a set it and forget it with their account actually lost value. If they was generally invested in the S&P or funds that track the S&P, then their account value has gone down over this time. Okay. Now we're going to move this same chart and we're going to take it from this 6-month view to a 15-minute, one-day view. So every candle that you want to see now is going to be of 15 minutes during that day. You see these shaded blue parts? That's when the market is closed. That's not the general session, which is from 9:30 to 4. Mm-hmm. But what I wanted to show is on the 12th, Thursday the 12th, the market closed at the S&P closed at $393.80. Okay. On Friday, it opened at 396.71. So it already opened roughly about $3 higher than it closed, which means if you're a day trader and you bought the close on Thursday, when it opened on Friday, you were $3 ahead. We traded increments of 100. So if you just had one position, you made $300 on that one position. A position being 100 shares. So you made $300 on that S&P flip from the close Thursday to Friday's open. If you kept it throughout the day Friday and you held it until closing, the S&P closed at 401.72.
Right.
That is a $5 range for the day. When we was talking ATR, average true range, that's a $5 gain. So one position would have been $500, would have been made on that one day. Yet and still, we are in a down market. So even though the market is going down, I just showed you how you could have made $500 in one day. You see that, guy?
Right.
Okay. So we're going to go from here now. And we're going to go over the stocks that yourself and K-Wise gave to me. So let me ask you, guys, who you think fared better, you or K-Wise?
Well, mostly K, because I looked at some of the list that he had because they was things that we utilize daily. And the things that I was looking at were some of the trending stocks. And especially when you were talking about now with cannabis. Cannabis is like a trending stock because everybody's starting to get cannabis farms and things of that nature, and they're starting to legalize it. So I was wondering, how that was moving on the stock exchange, because you can get a stock on Cash App, Robinhood, all these little different apps, and I was just wondering how it was actually moving and how you would be able to get anything from it.
Okay, and that's peace, God. And I actually made a video about that. It was a while back on the Absolute Boss Collective. There's a video I have there called "Looking for Weed," and I was covering the weed stocks. And here we are again. Like, that video was made last year, and there was a time I made money off of weed stocks, and I just have not been following it. And the reason why I haven't been following it is because it hasn't been moving as we expected it to. So when you sent me that and you said the cannabis, I said, oh, let me look at it. And again, when I pulled it up, it was worse than I thought. A lot of these weed companies, number one, they're not making no money. Okay, because when you think about it, they need land, they need to work the land. There's so much competition, and a lot of people, there's a black eye on the game because in a lot of states, it's still illegal on the Fed level. So a lot of banks will not support those businesses because they fear that the Fed can come in at any time and shut it down and seize the assets.
Right.
So a lot of them can't even really get a bank account. They have to work in in cash, which is not the best thing. They can't get any loans, things like that.
Right.
However, the stock that I have here for you and God, like, I'm aware of at least 100 weed stocks. Okay, so the one that I have that I was able to find, which was the best performing, you can see on Friday, it's the one I have highlighted here, IIPR, that is up $16 on the day. Okay, and I think they manage the real estate for marijuana. Let me see. Let me double check. Real estate investment trust, which engages in the acquisition, ownership, and management of industrial properties. So these are the properties that a lot of these companies are using to grow their marijuana. Okay, so even though it's a marijuana industry, right? Like the same way we was talking about the metaverse and all of that kind of stuff, right? Mm-hmm. Even though that's the hype, right? Everybody's caught up on the weed, right? Mm-hmm. What the money that's being made is in the licensing of the land. That's a stable aspect of a trendy industry. You follow me? All right. So we're going to do the same, kind of like the same thing that I did with the S&P, right? We're going to look at how your stocks performed from the 6th to the 12th. Mm-hmm. Okay. Pull that up. Run that test. Okay. And down straight across the board. You got Delta Airlines, you got Netflix, you got this IIPR, GM, and Carnival Cruise Lines. Okay. So at the bottom, you see the average. Mm-hmm. Average share price, $82. That's at the beginning price. And the average ending price, $78. A loss of 7.64%. Okay. Mm-hmm. Then we're going to take that same activity. We're going to look from the 12th to the 13th, one day. Right. Which means you bought these at close on Thursday, held them through Friday, sold them Friday at close. You would have made 6.39%. See that? Delta Airlines went, just over $1 up. Netflix went up about $10. IIPR went up $16 as we discussed. 10% in one day. Okay. GM went from 36 to 38, 5%. Carnival Cruise Lines went just about $1, 7% up on the day. Mm-hmm. So in one day, had you invested in these, you could have made 6.39%. You go to any bank, you go to a money market, anywhere, you're not going to be able to match that 6.39% in one day. Okay? And again, we're in a downtrend. Everything is going down, but we had a nice pop to the upside on Friday. Okay? And so the tide actually may be turning. We got to see how things open. Oops. What I do here? Okay, so now let's look at KYs. Let's see how KYs fared. Mm-hmm. Okay, so here's KY's portfolio. We're gonna do the same thing. We're gonna go from the Equality Day, the 6th of May, to the Knowledge Wisdom Day, the 12th of May. We're going to run that test. Okay, and here we go again. Average of 239 share price. He ended at 221. He was down 2.82% over those days. He still had some winners in here. He had Pfizer that was up 2.88%. He had General Mills up 1.13%, and Kellogg's up 0.25%. Okay, so let's remember this number here, 2.82. He lost over 5 days. We go from the Knowledge Wisdom Day to Friday, same science. He's buying at the end of the day, Thursday, and keeping all day through Friday, and he made 1.25%. Okay? So he has a lot of winners here. Tesla went up about $30. Costco went up about $10. Microsoft went up about $5. General Mills, $1. Procter & Gamble, about 70 cents. Walmart, about $1. Kellogg, that's just a couple of cents there. And this is the one that he was talking about. He talked about a water purification system. Actually if you remember the movie, The Big Short, there's a movie called The Big Short. The character that's in there, Michael Burry, is who they're talking about. And he's a very famous investor who predicted the housing bubble crash. That's his thing now. He only invests in water. Mm-hmm. So when I pulled up the different water stocks, this one was the best one that I found, the best performing one. So that's the one that I put in his portfolio. Okay. So now we're going to get into what I then did after doing all of that is I combined both of y'all portfolios together. Mm-hmm. And I ran a test from May 13th, 2002 until this Friday. Mm-hmm. Okay. Now, obviously, there's going to be some stocks that was non-existent 20 years ago. So that's we lost Tesla, we lost Netflix, we lost a number of other ones. Mm-hmm. Out of the ones that were remaining altogether, the overall portfolio returned 302%. Okay, so we're talking about putting this money in here. 20 years ago, we was just building about your career, which you mentioned is within that 20 years. So if had you just stacked that for 20 years, left it alone, never touched it, you would have made 300%.
Wow.
Some of the monster returns. Costco went from $40 to $497, a return of 1,142%. Microsoft went from $26, okay, to $261, 893%. Procter & Gamble went from $46 to $153, 230%. General Mills went from $22. We talking about a dub and a rollie. That's what we talking about. $22 to $73, 229%. Walmart went from $55 to $148, 170%. Kellogg's went from $35 to $73, 107%. Pfizer went from $36 to $49, 34%. The water one, PRMV, went from $19 to $14, so we lost 0.29% on that. And I'm sorry to tell you, Josh Jamel, your Carnival Cruise Lines went from $31.86 down to $14.40 for a loss of 54%. Now we know in between that we had the pandemic, and everybody, and then we also had some people that was floating around on the ship for a while. So, and then they also had a ship capsized. They had a lot of issues. So that's indicative of their share price. The reason I did this exercise is because when I reached out to you guys with that request to give me some stocks, it wasn't but, I don't know, maybe wisdom or 2 to 5 minutes before you guys responded. Okay? So that's evidence that we have the ability to pick winning companies. We have that ability. We can do it. 20 years, especially in our age group, we know 20 years is not a lot.
Right.
So even something as passive as just investing, we all have the capabilities of doing that. And it's something that we haven't done, not as much as we should. Not as much as we should. I mean, a lot of different things. I remember one time I was building with the sister. She told me she played a lotto every single day. My first question to her was, well, how much do you spend playing the lotto?
Right.
And when she mentioned that amount, how much she spent, I'm like, you could be investing with that. A lot of times we're not thinking about the long game. We're thinking about the immediate game. We want something right now, so we're not really looking at that. But when we compare our financial situation to others, this is the missing piece. Okay, so I implore everyone to just get involved, whether that's going to be as simple as taking advantage of your 401k and your company match at your place of employment. That's like the basic thing that you can do for yourself. The more active that you become, the more you start looking at companies and getting to know them and getting to know their business, the better it's going to be for you. Okay, because knowledge is power. And if you know a lot about a company, so a lot of us are probably employed at companies that are Fortune 500 companies that are making great revenue. Right. We should be taking advantage of that, saying, hey, let me get some shares in this particular stock. So when we have situations like we have now where the market is going down, if you're in the know, you're constantly looking at these different companies and saying, what is that company worth? What is a fair price for their stock? And if you can identify that fair price, you want to try to get in as close as possible to that fair price and hold on to that. As an investor, that's passive.
Now, the question I have, God, is like you speaking, like a lot of us are working in Fortune 500 companies. Buying stock into that company would be more essential to for your retirement than the 401k.
Well, a lot of times, a lot of times, what will happen is, you know, a company it's basically they're gonna match whatever you're contributing in your 401k. The reason why I mentioned buying into the company is like if you're working at Google, if you're working at Apple, if you're working at Nike, Starbucks, any of these different type of companies, sometimes they'll have certain advantages. I used to work at Starbucks, so I know Starbucks has a bean stock program where they will give you a certain amount of shares. Not every company is going to do that. A lot of the companies will do a match, a 401k match. I know for a fact that Starbucks was giving stock. So you can, one way you're investing, you know, through your 401k, and then you're getting that benefit by being an employee and they're giving you stocks. So it really depends on a case-by-case situation on what your company is offering. If you're not employed with any of those companies, but you patronize these companies, then you should also be looking, because there's a reason why you're going there.
Right.
You're purchasing Apple products because either you believe in the product, you like the product, or whatever. You're going to Starbucks getting coffee, you like the coffee, whatever. You're not the only one. There's other people that do that too. So why not play the long game and get a piece of the company?
Right.
You know, it only makes sense. Piece of the God KY is just only responsible, financial responsibility. That's what it is. We go out and buy Nikes all the time.
Right. Right.
You know what I'm saying? We buy Adidas. Adidas is Yeezys. We was just talking about it, God. I was just looking at some new Yeezys that dropped, God. It's $700. $700 for a pair of sneakers, God. A pair of sneakers. It's rubber that we're paying $700 for. And still people will go out and it's not like back in the days where you just went in the store and said, let me get this in size 12. You got to do raffles, you got to order it, you got to wait online, all of this hype over a sneaker. Okay, fine. Be that as it may, let's get a piece of the company on the back end. Why not? We making it hot.
That's something that I was definitely interested in when it came down to certain things like what we buy and what we see in our communities. Like even when it comes down to fast food restaurants, if you go through certain neighborhoods, you will see like an Arby's, and you're trying to figure out like who still eat Arby's. Like you never go by there and see anybody in the Arby's. No disrespect to Arby's, but it's like you go there and you see an Arby's everywhere. Like you can't go to an area where you won't find an Arby's, right? So that means that stock is definitely moving because that company is still growing. Am I correct, Lord? Absolutely.
True indeed, God. True indeed. I mean, one of the things that's bugged out, right? McDonald's, right? Now, McDonald's, one of their competitors is what? Chipotle. I mean, Chipotle, Burger King would be more on par with them because it's really not the same thing to go from McDonald's to Chipotle. It's just another option, right? McDonald's invested into Chipotle. So we sitting here and then we'll be like, so against one another. But when you deal with American business, business is business.
Right.
A lot of McDonald's revenue comes now from real estate because they got so many different restaurants, okay, and franchises and stuff like that. It just tripped me out that they had invested in Chipotle. Okay, I didn't get that question or that statement that what would be a great surplus to invest in. Peace. That's crazy that y'all building on Twitter because I'm currently reading the Intelligent Investor in Stock. So this top is, that's peace. That's peace. Do for self. Just like your name say, you got to do for self. I think the Intelligent Investor is a great book, and so is Investing for Dummies because it breaks it down into simplifies the process. A lot of times, like we were building before, that esoteric language is put out there to scare you away, to make you think that you can't decipher it. You know what I mean? To the God K Wise, I don't know what you mean by surplus. You talking about surplus funds? You know what I'm saying? If you're talking about where to put your surplus funds, just clarify that for me.
Now that was I had a question like a couple of years back or what have you. I used to work on solar farms. I used to install solar panels on businesses and in the acreage and land. So with that, solar farms was just like first now starting to come out, and individuals started to use it as a wave, and the electric companies. Investing in solar panels do you think that can be a short-term or long-term investment, or can you even day trade something like that?
Yes, you can. When you talk about short-term or day trading, there has to be some kind of hype around it. So perhaps the time when you were working or as it started to gain traction, long as it's talked about and it's popular, then there's an opportunity for you to day trade it because it's going to be a hot stock. A lot of that is coming around right now by way of electric vehicles. Because you have Tesla, who kind of changed the game. You got about 3 or 4 that's like Neo, Lucid Motors, Rivian, that are doing electric vehicles as well. One of the things that people may not look at, you look at Tesla, the stock price is 700, I can't afford that. Well, what about the battery companies that they're using or the charging stations? One of them is like Blink Charging. So a lot of this is part of this wave with, green energy and solar panels and stuff like that. And the president actually was supposed to have some kind of agenda around that. Okay. I haven't really seen many of them popping right now, but then again, we are in a downtrend right now, or the market has been behaving bearish. So something that's like trendy is really not going to pop at a time like this. You're going to really flock to something that's more stable and more consistent with a proven business model. Yet, as time moves on, and we come out of this bearishness or the shock of interest rates being raised, we get over that. We start to look at these different things. But solar panel, yes, when you have a situation where the government is pushing it, people are asking for it, and there's companies that are innovating in that arena, then we can play a part of that. You know what I'm saying? That's something that we could look into what are the hot solar stocks right now and try to see, what's going on with that. Investing in NASA, a good idea. I don't know, God. I don't see why it would be. The only thing I think of when you say NASA really is I think of aerospace and defense. Okay, so you'll have a lot of defense companies that are popping because people are anticipating some kind of war or something like that. I don't see how you be getting money from NASA unless you're talking about the private industry. I know there was some talk about them, selling space rides. I think what you call it was into that. Virgin was into that. That dude was coming out with, it was him and Jeff Bezos. Both of them had a race to see who can get to space first and all of that. And they're supposed to be then breaking this down to people to go out and you pay $25,000 to go up into space. You know what I'm saying? I don't really see that as a good application. Yet we could look at the suppliers of NASA, the suppliers of that make rocket ships and stuff like that, and invest in that. That would be solid. As I'm learning about how to use futures now, I'm giving myself a year to completely understand how it all works. That's peace. Facebook user.
Yeah, that's Queen Nadia. Queen Nadia. I was looking to see who it is because a lot of times that when they comment in the group, the Real 360 group, they come up as Facebook users. So we have to really pay attention to that. But yeah, that's Queen Nadia. That's one of K Mel's and K Wise's student.
Okay, peace, Queen Nadia. Yeah, that's what you got to do. You know what I'm saying? You got to constantly study, and that's a beautiful thing. I had a partner of mine who would trade futures. Okay, so the difference would be by the time he was wrapping up his day, I was starting mine. Okay, so we could kind of go back and forth and talk about the different things that he saw in the futures market, and then I could tell him what I'm seeing in the daily market, and that was one way that we kind of went back and forth and discussed different issues that was going on and where we thought prices were going and stuff like that. I just implore you to keep studying, reach out with any questions that you have. Put yourself in position so you can take advantage of it, because the future market is crazy. This is where cats be making $10,000, $20,000 in a night. You know what I'm saying? When the activity is there. AI, artificial intelligence, replacing human resources. Well, if you think in terms of a lot of these business models, as a lot of these companies strive to get lean in what they're doing, I mean, it's just more cost effective to use a bot that you can tell what to do versus, a human. Human eventually gonna come at you like, yo, what's up with my rates? Yo, I need this day off. You know what I'm saying? Or call out. You know what I'm saying? You ain't got to deal with that with AI. So where do we get in when a situation like that happens? Is let's look at the AI companies. We look at the AI companies. We pick the best performing ones. We pick the ones with the highest paying dividends, and we invest in them or trade them. So as the industry shifts towards that, okay, fine. Our money is going to appreciate. You know what I mean? These are the type of observations that we can make and, benefit off of it financially. That's what everybody else has done and continues to do. We just need to make ourselves aware. And the point is, some people don't think that they're aware or think that they have the knowledge to do it. It's another reason why we need to get tighter bonds with the youth, because I'll be power cipher in about 2 weeks. Okay, so I'm not as hip as I used to be. Okay, if I meet somebody that's half my age, you're gonna tell me about certain things that this is what we're doing now. This is what we're into now. And then my question to him is, oh yeah, what company makes that? And I'm going to look and see how that company performs, and I'm going to try to place my bets there. There's no reason why we can't do it. How else are we going to be able to keep up with just the cost of living, and then how we're going to be to the point where we can get ahead and really advance ourselves.
All right, Lord. What advice would you give a young 20-year-old who just starting out in their career that wants to invest? Would you tell them to invest in utilities, local government, or fast food, or I mean, just like we've been saying, the fast foods and stuff around them, if they're looking to add on to their retirement benefit?
Well, a young person, the first thing that I'm going to tell them is to get involved. Okay. As far as all of these different industries that you mentioned, when you're creating a portfolio, you want to have diversification. So one of the things you mentioned was utilities. You want to look at the utility companies or utility ETFs, pick the best performing one, put that in your portfolio. Look at the fast food restaurants, select which is the best performing one, select that one, put it in your portfolio. Okay? I would implore anybody that's young to just get involved. Because as we was talking, 20 years old, we just was talking about a 20-year performance of a portfolio. Right. So just by them being involved as they're young, maybe they're young and maybe they don't really have a lot of responsibilities. Maybe they don't have any children. Maybe they don't have a car note. Maybe they're not even paying rent at that particular time. Then that's a good time to take all or the majority of their pay that they're getting and invest it. The best thing they can do is diversify. So there is typically, you can also see this on my YouTube channel, Absolute Boss Collective. There is a video that I have on there about the different sectors. There's 11 major sectors or industries, and then those industries break up into sectors. So what I would tell that 20-year-old is to try and find, maybe 5 of those sectors that you're interested in, or the 5 best performing sectors. The reason why I say interested in, because if you're interested in it, then you're gonna attain more information than somebody that's passively involved in it. So I would go to those. Ideally, if you can have in every industry, that's fine. But every industry is not gonna be in the top 5.
Right.
You know what I'm saying? So maybe if you concentrate on the top 5 industries at the time you start investing, then that's great, because these are performing the best. So start putting my money in there. Now, as we get into portfolio rotation and things like that, as times change or as we go from quarter to quarter, there's going to be changes. Maybe utilities might be popping right now, and then that might switch, and then consumer staples might be on top. Then that might switch, and it may be tech on top. You understand? Long as they're involved and they're actively managing or keeping abreast of how these things are performing, they can always move their money around and do different things like that. But as long as you're spread out in different industries, then even if there is a correction, they're all not going to correct as severely. You understand? Because even though now the market has been bearish, consumer staples has been rocking because people have been flocking to that. Oil has been rocking. Energy has been rocking right now. So you could be heavy in those industries, and some of the other industries, not so much. Okay. So that's the main thing I would tell that young person. Get involved, educate yourself, and put the money to work. And it's fine if you put your money to work and maybe you don't pick the best company. Maybe you didn't pick the best one. That's fine. You can always change it. You understand? It's a growing process. You have to be able to identify what's happening in the market, but also what is your timetable. Okay, that 20-year-old, maybe you might say, "Oh, I want to work for 50 years." You know what I mean? Or I only want to work for this amount of time. You know what I'm saying? You have to identify that for yourself, and then be able to take action with what the market is doing. So the best thing to do is to get involved. That's it. Show up, get involved, and put that money to work.
Also, too, Lord, what is a great place to start in investing? Is it a money market account, or just going into one of these stock exchange or stockbrokers situations?
Yeah, because a money market account is only going to be a capped interest percent. You know, whether it's 2% or 3% or something like that. And usually they're going to tell you got to put 3,000 or 5,000 in. You got to keep it in, and you're going to get this percentage. Okay, whatever percentage they're offering you, you can make more than that by investing in the right companies. So what I would suggest is, and anyone can do this, you can go online and search best brokerage account. And there are different articles and services out there where they will rank the different brokerages that are out there, and they will rank their performance in certain areas. So you can just peruse that chart and see like what meets your needs. Like if you want something, you want to be able to trade pre-market or after-market. If you want, to be able to buy stocks that are international or not international, you have to decide what's best for you. But I would suggest you get a brokerage account, even if it's Robinhood or Webull or Moo, any one of them, E-Trade, Charles Schwab, anyone. Open an account for yourself, the best one that meets your needs, and begin to get involved. Even if it's investing, you want to pick some companies, put your surplus cash, or try to set yourself up with a budget that I'm going to invest this amount every week, or I'm going to invest this amount every month. Just start doing that. Even if you start with 2 stocks, you can start with 2 stable stocks. I'm going to put $50 in there every week. Mm-hmm. Just do that. And try to learn as much as possible about that particular company and about how its stock performs. And this is, again, why you should invest in what you know, because if it's something you're interested in, you're going to have a lot more information on it. You're going to be that much more engaged in the study of it. Okay? Now, here's the thing. Don't fall in love. Don't fall in love. You might like a particular company and say, oh, I want this company. But then again, it may change. They may not be hot anymore. No. That may be not what's going on right now. So if you're in love, you're attached to this company and it's not performing, and you think that you're going to outsmart the market, you're going to lose that game. Uh-huh. You're going to lose. Try to align yourself with companies that are successful, okay, and put your money there, and then your money is going to appreciate. And as you gather more information and stuff like that and learn more about diversification, then you're going to make more money.
Lord, you know the hour goes quick. We're going to have to start making you a staple here on Real to Real 360, at least coming once a month and speaking to our audience about stocks and financial literacy.
Yes, sir.
Because
peace. Peace.
Please, Lord, pardon yourself. I don't know what just happened there. Like I said, we're gonna have to bring you on and make that a staple for you to come on to Real 360 and build with our audience at least once a month on financial literacy and stocks and things of that nature, because an economical blueprint is a key to success in every family and every nation. And with you being well-versed in stocks and in investing, I think that you're helping out a lot of families. You're helping out the nation, and we want to applaud you at this moment in time for that, because the knowledge that you've been given is wild.
Oh, that's peace, God. I appreciate that. And on that note, I want to shout out to God here, original man author, and his question: Do I think we're gonna have a bear market this year? To be 100% honest with you, I don't know. I really don't know. What I can tell you is that the performance so far has been bearish. There is an adage out there that says, however January goes, so goes the year.
Right.
Okay. Then we have the raising interest rates and the Fed decreasing their holdings on their balance sheet. What other reason do we have for the market to go up? Mm-hmm. We have companies coming out, and then when they're reporting their earnings, they're already telling you, yo, check this out. I think sales is going to be down because of the supply chain issue. So once our earnings start falling, the market is going to follow that. Okay? Doesn't mean that the Fed or the president, anybody can come out with a special initiative to try and save the market from falling. Because once the market falls, right, and people start liquidating their accounts and panic sets in, the S&P or the market itself could drop 50%.
Right.
Okay, so it's kind of a wait and see. I will just say that we have had bearish activity. Let's see how the market opens tomorrow.
Indeed. But yeah, Lord, I want to make sure that I extended that olive branch to you to come back once a month and help educate us and our followers and our viewers on financial literacy and investment. At this moment in time, do you have anything that you want to plug for yourself, like your YouTube channel? And when do you come on your YouTube channel so people can follow you and get some of this information?
Okay, my YouTube channel is Absolute Boss Collective. And let me tell you something, God. I am trailing you and KY. I'm not as consistent as YouTube brothers. Yeah, I mean, y'all keep bringing it. Every time I turn around, I'm getting notifications from y'all. And that's my goal, actually. I aspire to get to that level. Okay. So I have a couple of videos in the works. I would implore anybody to go to my channel and look at the $500 challenge videos. Mm-hmm. That is going to be the most inspirational for anybody, especially somebody that's new that want to get in there. I'm showing you what you can do with $500. I have about 31 episodes where I have done that. Okay. You can hit me up over there with questions. I'm open to doing consultations and all of that kind of stuff. I'm here for the people, God. You know what I'm saying? I'm here for the people, my people, and we just got to, put our footprint on this financial area. It's really sad. We got to make it happen, and that's my goal, God.
You know what I mean? But right now, guys, I want to also say peace to KY's. You were surely missed today. Peace to Mother Khadijah, which is KY's mom, who always watches our show, and want to say she's healing up very well. She's resting and she's back on her feet, running around. Just built with her yesterday. Also, too, repeat your YouTube channel, God.
It's Absolute Boss Collective.
Absolute Boss Collective is the YouTube channel to get the God Absolute. All right. Now, tomorrow we have a show with two young entrepreneurs. When I say young entrepreneurs, we're talking about financial literacy at the infancy stage where they're 8 and 10 years old. They have their own pickle company where you get different flavors of pickles. And they're out in Dallas, Fort Worth, Texas. Very, very intelligent young ladies. And we look forward to having them on. And we're talking about building financial wealth with the youth. And they're taking entrepreneurship seriously. And we want to always promote the babies while we're doing it. So today's episode of Real to Real 360 was definitely informative. We're going to bring absolute truth back. We're going to bring the truth back because we have to. We have to. You know what I mean? He's going to be a staple with Real to Real 360. So any individuals who are not following, you know what I'm saying, Absolute False Connection, you'll be able to see them right here on Real to Real 360. And I want to say thank you. You know what I'm saying? Absolute for coming on, and just hold on about 5 minutes after the show. You know how we do. And
yes, sir.
For the lost 5% nation of gods and earth, again, I want to say peace to those who went out and celebrated the life of Infinite Al Jamal, our big brother. May peace be upon him.
Yes,
you know what I'm saying? He surely will be missed. You know what I'm saying? And at this moment in time, I want to say peace to the gods, peace to the earth, and we out of here. Peace.
Peace.